When I started my career in insurance, I did not know anything about what insurance was. Simply, it was not my field of study, and I just discovered it a bit by accident. But I liked the challenges of it. It was a young startup. I was the first employee, and I dived right into it, but not knowing anything. So I had to learn a lot. And what seasoned people of the industry told me at the time was that insurance is sold, is not bought. And although I did not like it, because I was like, it's not exactly my philosophy. I like free choice. I like the fact that people have the ability to think about what is good for them. But also I've realized that we don't do it. So if we're not confronted to insurance, like you buy a car, if you don't have an insurance, you can't drive it. And in that sense, insurance is indeed sold, it's brought to you. The same for a lot of type of insurance, whether it's health, life, or house insurance. A lot of those elements are either forced upon you as a client or brought to you by an external party. I used a lot that sentence in my career, that insurance is sold and not bought, but led me into a lot of mistakes. I've done a lot of product development, business development, implementation. I've done that as part of my career in terms of doing the job myself, to leading those development, to implementing a new product in very large group, using not only one division of that group, but several divisions. So it needed a lot of convincing and work to implement. But the mistake that was consistently made at the beginning is think that there's a great idea, let's develop a product. Then I thought I was going to be successful, but it never worked exactly the way we thought of it at the beginning. So although we have to have conviction when a product is being developed, when a solution is being brought to the market, my conviction is also that we should not be always 100% prisoner of one's conviction. We need to think backwards, not top down, but bottom up. And of course, a lot are doing that. But a lot are doing that in a way which is, let's do it bottom up and let's listen to client, but at the end we will decide what is good for the client. And that's something which is a mistake. The best approach is to have ideas, to have competence, to understand what's going on, but also confront and let those ideas being fertilized by interaction with the client. So thinking backward, not top down, not with the eye of a fake, let's listen to client, but really letting the client drive that, the changes. And of course, at the end of the day, it has to be feasible and meaningful. So clients are not alone by doing that. There's a lot of knowledge in the insurance distribution ecosystem, which needs to be listened to as well. And it's sometimes a bit outlandish in terms of request, but very often it's very powerful. And listening to clients and their advisors is something which has made average product into good product in my career and changed completely the way those products were sold. I remember a product which was for very large corporation across numerous countries, and the idea was to pool the risk into one single location to diminish the, or to basically to create a stable price for a client and a long-term financial stability for this type of coverage, which is very appealing for CFOs. Now, this, to be able that it works, had to have feature inbuilt that were allowing this stability not to be a wishful thinking from the part of the insurers and the client, but something really implemented. And it's very simple, but although the risk managers of the insurer at the time were willing to listen to client, they were adverse to the idea of a commitment that was a bit longer than 1 year, but moving to a 3 years commitment. And of course, the client did not believe of price stability if there was not a 3 years not guarantee, but visibility element that was included. And once we've built that in the contract, it changed everything. But it needed so much work to create the basic understanding and acceptance by all the parties involved that we wasted 1 year. Now, what does it tell? It tells two things. It tells that we have to listen to the market to be able to be successful. It needs time to be able to convince people to accept the market's view, because insurance is something which needs to be sustainable in the long term, and too short-term decisions are also negative because they can impact the company financials in a very negative way. Therefore, building product is about listening to client, is about reversing the process, not top down, but really bottom up. But it needs also that the understanding that it needs building and creating change within the insurance divisions, and sometimes get board approval or changing even the guidelines if needed, but in a way which always protects the client in the long term, and making sure that the company is stable in the long term. So that's one of the things that I've learned during my career. And every time that I thought I had a solution, I was proven wrong by clients, and listening to them has made the product that we were selling much more successful.